The fund is on track to have the best month in its history, but I have mixed feelings about this. In this video, I tell the story of how Lighthaven prepared for the COVID-19 pandemic. Of course, as a professional investor, I'm grateful for how well the fund has performed compared to the market and other hedge funds. But what is top of mind for me is how this has changed our lives forever. And I have a heavy heart for all the people who have been impacted by this pandemic. For those who have lost loved ones, to those who have lost their jobs, and others who are struggling to cope. This is an incredibly emotional time for all of us. This is also the time when we should come together and help others. To that end, I am announcing that 25% of all performance fees received by Lighthaven Capital this year will be donated to nonprofits helping to fight COVID-19, such as the National Foundation for the Centers of Disease Control and Prevention and the World Health Organization. I also want to encourage each investor in the Lighthaven Fund to do the same, and will share how to do that for those who are interested in joining me. For a long time, I've been laser focused on protecting the Lighthaven Fund from downside risk. Publicly, I've said for years that stocks looked very expensive to me. The price to earnings ratio of the S&P 500 was higher than it had ever been except for the internet boom. I watched nervously as the bull market lasted more than 10 years, the longest ever on record. Back in 2018, I hedged the fund more than we had ever done before, and we succeeded in protecting the fund from a significant market decline that year. In 2018, the fund was up more than 26%, while the S&P 500 was down more than 4%. In 2019, we hedged again in response to the mounting trade war, but the market went to all-time highs, so that ended up causing underperformance. I did a lot of soul-searching and concluded that I had let my emotions get the better of me and that I had overreacted. That said, there was still something that didn't quite feel right. I was still concerned. For this reason, we kept most of our shorts on. Going into January, we maintained our shorts and we added shorts of mall-based stores. This ended up being very profitable for us and insulated the partners from the market collapse. In March, Lighthaven was up approximately 18% net of fees, while the S&P 500 was down 22%. The first time I really focused on COVID-19 was in late January, when one of my interns, Jing Yi, brought it up and urged the team to take it seriously. Jing Yi is a very talented researcher and analyst from China, and she was deeply concerned.
I first heard about the coronavirus at the end of December last year. Like in the Chinese Weibo, like similar things, so like the Chinese equivalent of Twitter, like some reporters started to talk about all of these things. And we actually heard some response from the government, like confirming that this is a coronavirus. The government were trying to, underplay this outbreak at the beginning. I mean, almost all government I've seen, the Japanese government, Italian government, they were really trying to underplay this, saying, okay, this virus is not that infectious. Please, people, don't be panicked. We don't have to shut down our borders, or don't have to shut down the city. The first time I mentioned to Lighthaven is because I recognized that there are several confirmed cases in the U.S. Actually, I think those are U.S. citizens coming back from Wuhan, China, and they were tested positive for coronavirus here. I think one's in Chicago and another one's in California. And I was super worried because the virus was brought to the U.S. at the time.
My conversation with Jing Yi focused me on the unfolding crisis. I started actively monitoring the news about the outbreak. Wuhan, China was in lockdown. Significant cases were being found outside of China, and the first cases in the US were just being discovered. I remember telling my wife Karen that this was really serious, and we ordered protective masks on January 26, almost one full month before all hell broke loose in the markets. Throughout February, I kept close tabs on the situation. I looked at the World Health Organization website almost daily. I kept comparing the daily WHO infection numbers with the numbers for the date 1 month previous. What I saw painted a very clear picture. On January 24, globally, there were 846 confirmed cases reported and 25 deaths. 1 month later, on February 24, there were 79,331 confirmed cases reported and 2,618 deaths. The WHO also published a graph showing how quickly the disease was spreading. I saw how infections were going parabolic in Europe and the Middle East. Clearly, it was only a matter of time when it would also hit the United States, and the same thing would happen here. It got to the point where Karen requested that I stop telling her because my emphasis on the severity of COVID-19 was worrying her, and the subject was dominating all of our conversations. I remember February 24th distinctly. Over the weekend, COVID-19 infection flooded the press. On Monday, the market gapped down, and I was quite sure I knew what was coming. Over the course of the next month, global markets collapsed, and as it did, I increased the size of our shorts. The thing that was concerning about March was that markets were getting hit globally all at the same time. It wasn't just stocks, but nearly all asset classes: domestic stocks, non-US equities, gold, oil, fixed income, and cryptocurrencies. They were all collapsing at the same time. There was no safe haven asset other than cash. Even the largest hedge fund in the world lost money. As a professional investor, March 20 was perhaps the most difficult time of my career. It was reminiscent of 2008 and 2009, but even more volatile. Back then, I wasn't as prepared. I wasn't an expert at shorting stocks, but my experience in 2008 and 2009 seared into my mind the importance of protecting the fund's assets. I've been training for this situation for more than 10 years, and my experience navigating the market crash of 2008 allowed me to make much better decisions this time around. On March 2nd, I shorted the S&P 500 in addition to the Russell 2000. Throughout the month of March, we also increased our shorts of brick-and-mortar retail chains and a school textbook publisher, Houghton Mifflin and Harcourt. Lastly, we increased our long positions and entered into new positions in companies that I believed would do well during the crisis. We bought more DocuSign and entered into a position in Teladoc, a telemedicine company. As a result of these actions, as of the time of this recording, on March 22, 2020, Lighthaven was up approximately 18% in March net of fees, while the S&P 500 was down 22%. Sadly, I think that there's still a lot of pain to come. Many people are still in disbelief and refusing to social distance. Some investors are buying stocks at this time. A few states are in lockdown, while most are not. What this tells me is that not everybody agrees on how bad things are, so that this crisis is not necessarily priced into the current stock prices. I certainly don't have a crystal ball, but I think it's reasonable to assume that layoffs will continue. Given the amount of debt of companies, bankruptcies could come soon, resulting in even more layoffs. There is a growing consensus that this will be worse than the 2008 Great Recession. Of course, governments and central banks around the world are also providing stimulus to the economy. It's impossible to know how effective these measures will be, but I am concerned that they may not be enough. The question on everybody's mind is, what should I do? First, take care of your health, the health of your family, and your community. Take this pandemic seriously. Follow the instructions of the World Health Organization and the Centers for Disease Control and Prevention. In terms of your investments and savings, I obviously don't know your situation, and it'll be different for every person. That said, I have a bias for action. I'm not suggesting that you should sell all of your investments. What I am suggesting, however, is that you meet with your advisor to come up with a plan and a strategy that works for you. As it pertains to Lighthaven, I believe that although the economic disruption to the global economy will be massive, things will return to normal eventually. At Lighthaven, we'll continue to do our best to protect and grow the assets of the fund. In the coming weeks or months, I believe that markets will stabilize, and that's when we'll start buying stocks again. My current guess, however, is that it may be 3 to 12 months before that happens. In the meantime, let's all stay safe, stay calm, and do everything we can to help each other. Thanks for watching.